Food prices, in particular rice prices, have been rising in recent months. Although the impact from elevated food prices is not uniform across countries, elevated food prices will have implications for our region, as lingering inflationary pressure from higher food prices will preclude central banks from turning more supportive of economic growth in the near term. Today, we will take a closer look at factors that are affecting food prices in 2023 and our expectations of food prices next year. Since the beginning of 2023, agricultural news has been making global headlines following notable spikes in rice and sugar prices. Notwithstanding these items, the World Bank Agricultural Commodities Index declined 8% year-on-year for the January to October 2023 period, against a 16% rise during the same period last year. A closer look at key commodities within the index revealed a mixed performance across the board. From January to October 2023, we observed a surge in the prices of rice, sugar, and Robusta coffee, while the prices of wheat, palm oil, and Arabica coffee fell. The sharp rise in some of these food items reflect a confluence of factors. These include extreme weather patterns brought about by the ongoing El Nino phenomenon, as well as export restrictions by key exporters. The current El Nino episode, extreme weather patterns, and global warming events are known to adversely affect crop use and global food security. To that end, several Asian economists are expecting reduced crop use this year. Countries such as India, Indonesia, Philippines, Thailand, and Vietnam were reportedly affected by a much drier weather or weaker rainfall condition. Admittedly, these concerns led to countries such as India to impose an export ban on some of its agricultural products such as rice, wheat, and sugar to dampen rising domestic prices and ensure a sufficient food supply domestically. This policy raised concerns of a potential global supply shortage, which resulted in a spike in prices for these commodities. This has been especially true for rice, which saw prices notably spike in August and September. On the other hand, the prices of wheat have fallen for the January to October 2023 period. This is despite the lapse in the Black Sea Grain Initiative in July. Similarly, for palm oil, prices fell sharply following strong production numbers in the current high output season amidst the ongoing El Nino phenomenon. In the near term, upward momentum in palm oil prices will dampen due to a build-up in palm oil inventories. Looking ahead, where will food prices be in 2024? When discussing the outlook for agricultural commodities, weather-related factors are a central point of concern. The US National Oceanic Atmospheric Administration Climate Prediction Center announced in their El Nino advisory on the 9th of November 2023 that El Nino is anticipated to continue through the Northern Hemisphere spring, with a 62% chance during the April to June 2024 period. Due to unfavorable weather conditions, signs of distress have emerged with Thailand and Vietnam, the next two largest exporters of rice, as they are unable to plug the supply gap from India's export ban. This has led the USDA to revise downwards its global rice production outlook for next year, resulting in a projected supply deficit as global consumption exceeds production. Given this, rice prices will continue to be elevated well into 2024. We expect rice prices to continue its upward trajectory by 2 to 5% next year. For palm oil, its global production is set to ease next year as top producers Indonesia and Malaysia face slower production. The Indonesian Palm Oil Association, in a press release, expect a decrease in 2024 output if plantations are not guarded against the effects of El Nino. However, despite El Nino-related disruptions, we see downside risks for prices. The USDA Foreign Agricultural Service still projects a supply surplus next year, albeit narrower than in the current season. A supply surplus, together with high stockpiles in key producing countries and sufficient reserves in key importing nations, lead us to believe crude palm oil prices will ease from 2023 levels to 3,400 ringgit next year. For sugar, the impact from El Nino is expected to be minimal, with the USDA FAS projecting an increase in sugar production in the next crop year, leading to a surplus in supply. This improvement is driven by Brazil, which accounts for more than a fifth of global sugar production and is relatively less affected by El Nino compared to producers in Asia. Our baseline forecast is for sugar prices to ease in the range of 4 to 6% in 2024 given a higher production outlook, especially as El Nino should let up in the latter part of the year, improving the production outlook for other major producers such as India and Thailand. Wheat production is expected to decline next year, leading to a supply deficit of over 10.5 million metric tons, a reversal from the surplus in the current season. Production from top exporter Russia is expected to fall amid the ongoing conflict in the region. However, despite the fallout of the Black Sea Grain Initiative between Russia and Ukraine, there is little evidence of major supply disruptions for this commodity. Given this, we expect prices of wheat to taper off in 2024 by 2 to 7% as the war premium fully subsides. However, we cannot discount the potential risk of an escalation in the conflict leading to upward price movement for wheat. To sum it up, 2023 was a year that saw a sharp rise in key agricultural commodity prices due to a confluence of factors ranging from a dry spell brought about by El Nino to export restrictions set in place by key producers concerned of their domestic supply. Looking ahead to 2024, drier conditions will be a key theme driving prices. This is true especially for rice, sugar, Robusta coffee, and palm oil. The extent of the effects, however, will vary for each commodity, with government policies also continuing to play an important role in determining food prices.